Good morning, everybody. Good morning, buenos dias, and all that good stuff. How we doing today? Welcome to the education room, guys. Everybody good? You can hear me? No worries? Coming in loud and clear, feeling good about the world? Nobody can hear me? Oh, man, this is horrible. Did I unmute? Oh, you can hear me. Cool. Love it. Welcome to the room. Sorry. Got a frog in my throat. Guys, this is the education room. It's the information room. This is the get the answers that you need room. Look at that. Pachoo. So that you don't have to wonder. One of the things that you never have to wonder about is when the market may make a crazy reaction to news. So every morning I come to forexfactory.com. Good morning, Justin. And I'm looking for high impact news. I'm looking for these red boxes that say, hey, the market could fall out of the norms. It could spike, it could jump, it could reverse. Good morning, Chariot. Did the F5 fix your chart? Excuse me, my goodness. No? Did you squish it up to make sure that you actually had areas? Make sure that the whole chart was naked? Did you go to your drop down and make sure that it was actually on there? You can jump on with Jason and Tech. I'm not sure if you want to show me a picture of your charts and the drop down. I might be able to help you. You're on right now? Okay, cool. I just like to make sure you guys have what you need. There's the news, guys. Every morning I come here. Every morning I check it. It's just one of my routines. You're welcome. Sorry I wasn't more helpful. And then we're going to do the same thing, guys. We're going to do a 101 today. I have revamped the trading view side of it a little bit, actually quite a bit. But guys, the whole goal is to learn to read your indicators. I put a silly picture in the room earlier. And I said this the other day. Guys, if you ask 10 people to draw a flower, you're probably going to get 10 different flowers. And that's kind of what trading is, guys. You got to find your way. Until you have your way, until you figure out what works best for you, where your tolerances are. Guys, give me a Y if you can hear me, please. Pete will know to reboot, go through, kill it, come back. If you ever can't hear me, let's go through that. Hey, Mark, I can't hear you. I'll ask the whole room. If the room says yes, then it's probably you. Something's going on. But guys, I think this is a really important thing to think about. Everybody's different. Everybody sees things differently. Everybody reacts differently. Everybody has different pain tolerances, risk tolerances, reward goals. Guys, that's okay. This classroom is designed to teach you to read your indicators so you can find your thing. But until you have it, until you're at that point, guys, I'm going to give you the easiest thing ever. In the room, you get a couple gifts, if you will. Every morning, I hand out. Let's do it. I hand out trading plans, one for TradingView and one for NinjaTrader. So I'm going to put those in the room right now. These trading plans are not the end all be all. These trading plans are not the only way to trade the software, guys. These trading plans, let's zoom a little bit. I love a good zoom. Are stepping stones in your learning journey. Guys, they're designed to teach you how to read your indicators. These trades are designed to optimize your chances of success. You're going to craft a plan tailored to your personal goals, and it's going to be based on your ability to read the indicators. I can't stress this enough. Guys, again, one more time, give me a Y. I'll do the reboot on my end. Let's see if that works. Let me kill Discord and come back, guys. I'll be right back. Nobody panic. after these messages. Where's my Discord? There it is. Be right back. Sometimes it just doesn't work out the way we want it to, YouTube people. But we're going to see if we can get this going. There's the education room. We're going to reconnect. Education. Blow it up, pop it out. Look at the chat. All right, can you guys hear me? Yes, yes you can. Cool. Awesome. That's what I was hoping for. Guys, these plans that I give you are the most basic, the remedial. They are trace your hand, draw a turkey plans. They're designed to optimize your chances of success, to give you the best of the best, the highest probability, but most importantly, the plans that I give you, the KISS plans, the keep it simple plans, are just designed to teach you to read your indicators. There's only 3 rules for a trend trade. It only takes 2 charts to make it happen. Is that all you can do with the software? Absolutely not. But you're going to learn to read your indicators to recognize advantages, guys. Advantages become your trade. Chart reading is about 90% of your day. Chart reading is a whole lot of doing nothing. And then 10% of your day is actually trading because you have the advantages that you need. And through your chart reading, you're going to understand some very key concepts. You're going to understand where the market is likely to go. This is going to help you with targets. You're going to understand where the market is likely to stop. This is going to keep you in that 90%, saying this is an area that could reverse the market. I choose not to trade into it. And then you're going to know where the market is likely to continue. And this is going to become your entry for a trend trade. So as we go through the day, we are going to talk about 2 different platforms. I'm going to begin with NinjaTrader because the majority of you are in NinjaTrader. NinjaTrader uses dynamic Renko bars. TradingView uses minute bars. So the rules for each platform are very different. It's apples and oranges. So if you are a TradingView user, you're in the second half of my little PowerPoint. But for both of them, we're going to learn trigger line rules, guys. We're going to learn rules for when it's okay to trade. And I say it's okay to trade because the rules, whether it be NinjaTrader or where is my TradingView one? Well, dagnabbit, I lost it. Whether it's NinjaTrader or TradingView, guys, your rules describe a pattern. That pattern can be studied and proven to win more than it loses. That's the whole reason for taking a trade, is because rules are met. So in the very beginning, day 1, as you start out or as you recommit to searching for your success, let it either be rules met or rules not met. And when that's your only 2 options, it takes a lot of the opinion out. I'm going to encourage you guys to simulate. I can't force you to simulate. I can't make you stay on the simulator to learn the rules. I can't make you stay on the simulator to learn how to move stops, to take profits, to get in, to get out, right? Because everybody's like, oh, I have to have a skin in the game or it just doesn't work out for the educational process. Poppycock, there's a reason that pilots are in the simulator before they get lives on board, guys. This is your no risk. This is your make mistakes. This is the learn how to fix mistakes area. And then if you go through the first step to becoming a confident trader ASAP, you're going to post your trades in the room and you're going to say, hey, Mark, this is how I read my indicators. That's it. I don't judge you on the trades that you take. I might say nice trade because sometimes they're nice trades. But we're going to talk about your chart read. We're going to make sure that you're understanding the advantages. And when you understand the advantages, it's going to help you make decisions on whether or not you want to enter. And it's going to help you make decisions on how assertively you need to manage. So simulate, practice, post in the room. And the second thing, keep it simple. Keep it focused, guys. Use your spreadsheet and track your progress. Every time you post in my room, you'll get feedback. Every time you get feedback, you can put it in this tracking sheet. I'll drop it in the room too. It's a generic tracking sheet. And in this tracking sheet that I just dropped in the room, it gives you a spot to put the date, the picture, the money you made or lost, were the rules followed. And I think this is probably one of the most important categories. Did I follow the rules? Did I have an advantage? Was there an edge? And then feedback from class and your notes, guys. And what's going to happen is every time you post in the room, you're going to tell me how you read your indicators. If you made a mistake, I'm going to tell you. If you traded into an area, I'm going to tell you. If you jumped in too soon, I'm going to tell you. You're going to start to see things repeat on your tracking sheet. This is your thing. This is the thing that's going to help bring you success. These are the things that are keeping you from success. So every morning, you're going to go back and you're going to commit 2 to 3 minutes of your day to look at what you did yesterday, to ask yourself what worked, what didn't work, what felt easy, what made you nervous. And guys, this little historical study each morning sets you up for the day because now you're focused on the good stuff. And it also accelerates the learning because you're beginning to recognize the patterns that are bringing you success. So it's always been this path, guys. We've been teaching online for 20 years. Learn the rules, practice the rules, ask for feedback. Excuse me, ask for feedback. Use the coaching that Nexgen makes available to you. So as we get into Ninja Trader first, 3 rules, that's it. That's what I told you guys. We're going to keep it simple. Each rule, when it's true, gives an advantage. So rule number 1 being true lets you know you have the advantage of momentum. This is a market that's very difficult to stop. Rule number 2 says there's no termination conditions. No area is likely to stop the market. This gives you room to profit targets. We're just going to call it a clear path. Once you can identify momentum or the lack thereof, once you can identify a clear path or the lack thereof, you have everything you need to be successful with the software, guys. You have the tools in place to build your own plan, a consistent plan, a profitable plan. This is your core. Learn these concepts. Your 3rd rule is your first entry, and this is the trend trade entry. And when you learn to follow these rules, this is a trade that typically wins 70 to 80% of the time. It's only 3 rules deep, and it only needs 2 charts to make it happen. There is a large chart. This is where everything begins, and this is a slow chart. It's a broad stroke of a brush, guys. It shows the overall opinion of the market, and it takes 1 bar, the first bar, to define direction, momentum, and areas. Your first 2 rules will be met on this chart. When those rules are met, you'll turn your attention to a small chart. This is your entry chart. This is the chart where you are going to pinpoint right where the market is most likely to continue. This is going to allow you to reduce risk. It's going to allow you to increase profitability, guys. 2 charts, 3 rules. And we use the 2 charts because you will never, ever, ever be in charge. You'll never be the one that makes the market move. The market doesn't know you exist. So your large chart is the big crowd, the movers, the shakers, the influencers, the people that get things done. Your plan is designed to keep you in their good graces, following their trend, using their momentum, and not trading into the areas they react at. And then your small chart is the small crowd, the fighters, the ne'er-do-wellers, the men and women who create what we call a retracement. And a retracement is a little push down when everything says up, or it's a little push up when everything says down. We rely on the fight in the market because when that fight happens, your 3rd rule pinpoints right where the small crowd is most likely to lose their fight. And when the large crowd rules are in place, they typically lose 70 to 80% of the time. That means you're giving yourself the potential to win 70 to 80% of the time. Pretty cool, right? Unless you just absolutely jack up management, it's difficult to not have a good day with 70% winners. We're going to talk about the indicators that we're going to use to define these rules as true. Both charts have areas. Now, areas, they're horizontal lines on a large chart. They all have names, guys. So we're going to run through what they are and what they mean. So if I see a divergence high, it's a magenta line. It's code for hot pink. and it prints off of a pivot. All that magenta line is telling me is that the buyers were in control, they were pushing the market up, everything was going swimmingly, and the sellers stole their momentum. That's all it is. Divergence is a loss of momentum. In a downtrend, sellers are in control, life is good, nothing's going to mess them up, and then the buyers steal their momentum, push the market up. You're going to see a cyan line from a low. So divergence, highs and lows create a literal line in the sand where the large crowd is likely to react. You're also going to see Fibonacci resistance. It's just a red line. And this red line, when the market is trending up, this is a point where the market may stop, it could bounce, it could reverse completely, it could break. Decisions are made at key areas. And at support, blue Fibonacci support, when the market is trending down, it does the same thing. This is an area where the market could stop. It may reverse, it might bounce, it has the potential to break. You'll see it, you'll know about it, it won't sneak up on you. You're going to see yellow 1-to-1s. In an uptrend, they'll behave as resistance. In a downtrend, they'll behave as support. And guys, these horizontal lines on a large chart have a different role than they do on a small chart. On the large chart, this is where the big crowd makes decisions. These are the areas that could stop the market. On a small chart, these are the areas that could create a bounce and get you going in the direction of the large chart. We're going to break it down when the rules happen, but we got to use triggers. Triggers are the other set of indicators we're going to talk about. And then we just get right to the rules. There are small triggers, 2 solid lines. They create the small triggers. They are a fast moving average. 2 dashed lines. These are the large triggers. They are a slow moving average. Guys, I'm going to drop the picture of the areas in the room for you. I would encourage you to steal it and make sure you know their names because it's going to come in handy. I'm going to drop a picture of the triggers in the room for you. Know the difference between small and large. You don't have to know what creates them, but we're going to use trigger lines to define momentum for rule number 1. We're going to use trigger lines to define termination conditions for rule number 2. We're going to use the large trigger lines to define your amazing entry for rule number 3. The only thing you need to know is that these are small and that these are large. So you guys ready to get to rules? Let's do some rules. The first rule, number 1 for a reason, says that the large chart needs strong trigger lines. It's going to give us the advantage of momentum. So let's go and let's learn strong trigger lines. It is a 1 picture lesson, guys. When the background on your large chart is green, the market is going up. Your highest chance of success comes from going up with it. When the background is red, the market is going down. The path of least resistance is going down with it. The trend is your friend. I'm sure we've all heard that. In an uptrend, the only way you could ever have strong triggers is if both small triggers and large triggers are green. In a downtrend, the only way rule number 1 could ever be met is if both small and large triggers are red. So, strong triggers is 1 look. Strong triggers means that in an uptrend, your smalls have broken above and away from the large triggers. The large triggers are wide. They're angled in the direction of that trend. It looks like scissors that are open and ready to cut. This is your strong trigger look. You'll recognize it on the first bar, and it'll look just like that. Strong triggers leads the way. Whether it's a big gap or a little gap, if the colors match and there's space between, that's your strong trigger look. In a downtrend, smalls below the large, space between the two, and once again, you're going to recognize it on the first bar. So if it's a little bit of space, it is strong triggers. If it is a lot of space, it is strong triggers. The only time strong triggers are no longer strong triggers is when the smalls work their way back inside of the large. If there is no space between your small and large triggers, guys, there is no advantage of momentum. Here is your large chart. Crude oil. Colors match. There's your space. And as the smalls return, the momentum is going away. Space means strength. Space means strength. Space means strength. When you get weakness, there's your big retracement. So is everybody good with that? It really is. It's one look. It's either strong or it's weak. Keep it very black and white in the beginning. The first look means that the odds are favorable for the market to continue in the direction of the trend. Strong trigger lines has nothing to do with price bars. Strong trigger lines has nothing to do with Fibonacci areas. Strong trigger lines is nothing more than separation. And when you have strong trigger lines, it's going to be hard to stop that market. When you have strong trigger lines, key areas are more likely to break. Guys, strong trigger lines will even cover some of the mistakes that we all make as new users. So will you give me a why in the room, especially if you're new? Feeling okay about strong triggers. Separation is strength. And when I have strong triggers, I have to make sure that there's nothing in the way. Termination conditions are Fibonacci-based indicators that may stop the market. Termination conditions, how's this for easy? You ready? Horizontal lines on a large chart. Magenta highs, Fibonacci resistance, yellow one-to-ones. All of these can behave as resistance in an uptrend. Fibonacci support, divergence low, yellow one-to-ones. All of these can behave as support in a downtrend. These are the areas where these good folks make decisions. This is the areas where the market may bounce, may reverse, may break. I'll never know what it's going to be. So there's a simple recipe to not trading into a brick wall. If your dynamic Renko bars reach resistance, any of those areas, magenta divergence highs, one-to-ones, Fibonacci resistance, I want you to ask yourself, where are my triggers? If all of your triggers, both small, both large, remain below the areas of resistance, resistance is defined as a termination condition. Your rules say do not, under any circumstances, initiate a trade directly into that area. If price reaches Fibonacci support, you're going to ask yourself, where are my triggers? If your triggers remain above support, all four trigger lines, you're going to say to yourself, this is a termination condition. It could bounce, it could retrace, it could reverse. I have absolutely no idea what it's going to do. Absolutely no trades into Fibonacci support. Does that make sense, everybody? Once you can define a termination condition, it opens the doors. Rule number 2 is a rule because when price reaches Fibonacci resistance, divergence highs, yellow one-to-ones, Fibonacci support, and the trigger lines don't break, more often than not, it's going to stop the market. So if something causes more losers, we'll just say losses, than wins, it has no business being in a trading plan. Does that make sense? If price reaches an area and the triggers don't break and it stops the market more often than it does not, trading into those areas is more likely to create a loss. There's just no reason to have that in your plan. Your plan says, let's get a clear path. Well, clear path can come from a reversal. When the market reverses and everything's going down and there's nothing in the way, price hasn't reached an area. It can be the same thing going up, coming from a termination, reverses the market, strong triggers, nothing in the way. That's the easy way to recognize it. You're also going to get what we call breakouts of Fibonacci. This is what it looks like when an area breaks. Number 1 says price reaches Fibonacci support. Triggers are still above. This is a termination. Wait for the reaction. Guys, if you're in a trade and you want to hope it breaks, that's cool. But if you're not in a trade yet, it's all right to sit still, to just relax, to not enter the market because you just don't know what's going to happen. But it's more likely to stop the market than it is to break. When 2 of your triggers absolutely smash through that area and you have momentum, now the area has the potential to break. It's just potential. But now at least the potential is there because strong triggers break things. It's not until 4 triggers get below support, both small and both large, that support is considered broken, that your path is now clear. And guys, support turns into resistance when that area is broken. Your path remains clear until you reach the next area. And once you hit the next area, guess what? Right back to number 1, waiting to see what the market's going to do. So price reaches Fibonacci resistance, none of the triggers break above. There's your giant reversal. 2 triggers get below Fibonacci support. The potential was there, but the potential was never realized. Look what happened. The market goes up, reaches Fibonacci resistance with potential, and it doesn't work out. Market comes down, hits Fibonacci support, hits Fibonacci support, hits Fibonacci support. Guys, there was potential. There was potential. That was definitely a potential trade. This one's directly into a termination. There's a lot of waiting. Termination, potential, clear path. Know the difference. Clear path is your high probability trend trade. Potential is the second trade on the plan that I gave you. But just like we saw in crude oil, there will be times when the areas are stacked, when you can't seem to get that clear path that you're looking for. There will be times when it's fib after fib after fib into one-to-one, into divergence. And guys, this is 90% of your day. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is waiting for areas to break, because even with odds favorable momentum, that red line can stop forward progress. That red line, that blue line, that red line, that blue line. Holy smokes. Over and over and over. And guys, you now know where highs and lows have the potential to happen. You can use trigger lines to help you see it, to help you understand it, but it requires a level of patience. The futures markets trade billions daily. It takes $400 a day to put yourself into 6-figure income. Learn how to make the easy money. You'll find more. So guys, when the large chart defines the trend, the highest chance of success comes from trading in that direction. When the large chart has strong triggers, you have a market where the odds are favorable for it to continue in the direction of that trend. When the large chart has no termination conditions, you have a clear path, which means that you have a market that is screaming up and down with absolutely nothing in the way. It's time to go define an entry. Are there any questions about momentum? It's one look. It's separation between the small and large. Termination conditions are nothing more than price reaching an area and triggers not breaking. This is your pause. This is your wait. This is your hold the phone. Guys, your final rule is going to pinpoint where the small crowd is most likely to fail. You guys remember that small crowd that creates a fight? That little push down when everything says up, that little push up when everything says down. When your large chart says up, says clear, says strong, the fighters show up. So rule number 3 is very specific language. I'm going to give it to you right now. I'm going to encourage you to learn these phrases. Your entry is so accurate that you're going to use a limit order. You're going to wait for the market to come to you. And you'll use a limit order to buy or sell a pullback, that small push against the large chart trend. You're going to buy or sell that pullback at an area, at a horizontal line, at Fibonacci, at a yellow 1-to-1, at a mid-band. No worries, Andy. Hopefully it all comes back for you. And guys, that area needs to be inside of triggers, inside of large triggers. So when you're looking to define your entry, you're going to buy or sell a pullback. You're going to do it at an area, Fibonacci support, mid-band, or yellow 1-to-1s, but those areas have to be inside of the dash, the large triggers. There's two sets on your entry chart, one from the small chart, one from the large chart. Price returns to large triggers. Triggers don't create bounces, but triggers define the retracement area. The tighter they are on top of each other, the more accurate your entry, the least amount of risk. Areas in that retracement zone create the bounce. And guys, your entry pattern will look the same every time you take it. If the trend is up, if the momentum is strong, if the path is clear, you're going to have the fear of missing out as your small chart rockets north. The pullback begins with a reversal bar. The reversal bar is not an entry. The reversal bar is really a little loss of momentum that hopefully takes us down to our perfect entry. At the time of the reversal bar, and with a little bit of study even before it prints, you're going to be able to say out loud in your most confident voice, this retracement is most likely to pull back somewhere to the top of these large triggers, to the bottom of these large triggers. That's my retracement zone, but trigger lines aren't bouncy. I have to define the areas within. So I'm going to look from the top line to the bottom line. And I'm looking for mid bands, yellow 1-to-1s, Fibonacci support. I've got 2 out of 3 here. This blue shaded area shows you the area, the point, the region where the market is most likely to bounce and continue in the direction of the large chart trend. This is where the market is likely to continue. Because of the large chart advantages, because you have an absolute freight train going forward, right? There's momentum. That's what I picture. There is momentum. And it is screaming north. And I don't have anything in the way to stop it. I'm going to activate a limit order just above the highest point of support. And I'm going to tell them, come get me. Come get me in that market, guys. This is your high probability trend trade entry. Because through the rules, you have defined where the market is most likely to retrace, because you've defined where it's most likely to continue, you have also defined where the market should not go. Now, guys, where the market should not go is where initial stops are placed. Where the market should not go is where the advantage of rule number 3 is lost. If this is going to be part of that 70 to 80%, it shouldn't make it 4 or 5 ticks below those triggers. So any line, any Fibonacci support, any midband, any yellow 1-to-1 on what we call the wrong side of the triggers is not an entry. This is where you'll cut ties with a trade that isn't producing. In a short trade, it's the same pattern going the other way. Reversal bar starts the pullback. Trigger lines define where the pullback is most likely to go. Areas within those trigger lines define where it's most likely to bounce. Guys, it's a little nerve-wracking to activate a limit order and sell a market that you see is going up. But as that market is going up, it's not. That market, and where's my picture? Hold on. That market is going down, and it's going down with strength. And there's nothing in the way to stop it. This is a tiny little move counter to the underlying trend. And you just pinpointed where it's most likely to continue with everything. All of this on a small chart happens inside of that one bar on a large chart. And you're going to notice that tail. You guys, does everybody see that tail? We don't trade tails. We trade pullbacks to areas inside of triggers. Successful trend trades, you're going to see that tail after the fact. You can actually go circle those tails when the rules are met. Do a little historical study. Does it pull back to an area inside of triggers? Well, let's go see. Let's see if we can find the rules met. All the momentum. Boom, boom, boom. Potential to break. There's a tail. Notice it came back to the large triggers. There's that tail. Pull back right to the areas, right inside of the retracement zone. The one before it, pull back right to the areas, right in the retracement zone. And the market never went where the market shouldn't go. Does that make sense, everybody? That's your pattern. That's a pattern that worked beautifully on the 6th of November of this year. That's a pattern that worked beautifully in 2021 on a different market. That's a pattern that worked outstanding when the ES was trading in the 3000s in 2022. Trading is patterns. Patterns repeat themselves, guys. Your job is to learn the pattern, to learn the rules, to learn the advantages. And here's the cool thing about day trading. If you focus on the advantages and not the result, momentum, path, and entry. If you say it out loud as you look at your chart, I have momentum, my path is clear, I can define an entry, you have a high probability trend trade. You have the best of the best. You have a pattern that you can prove wins more than it loses. That's what we call an edge. When you have an edge, probabilities say you're more likely to win than lose. If you look at your chart and you notice that one of those advantages are missing, you find yourself in a medium probability scenario. So high probability, each indicator on every chart agrees with the rules for the trade. Medium probability, most of the indicators agree with the rules for the trade. However, an issue exists. These have to be managed a little more assertively. Now, if you look at your chart and you say, wow, I don't have momentum, I don't have a clear path, 66% of my advantages are gone, why are you taking the trade? How did that work its way into your trading plan, right? You're in control. And I'm going to say that really loud. You're in control of whether or not your rules are met. You're not in control of whether the trade wins. You'll never know. You're not in control of whether you have momentum. The market produces that. The market gives you a clear path. The market gives you an entry. The only thing you can do is pull the trigger. But when you know what's good and what's bad, guys, it helps you make decisions. Do I really want to pull the trigger? How aggressively am I going to manage it? Guys, can you hear me? I'd like to think I haven't been talking for 40 minutes and nobody could hear me. Are we good? Is it just Paul? Okay, cool. Whew, good morning, Miss Trina. Got nervous. So guys, that's your high probability trend trade. It's the same darn thing every time. It's the same repeatable pattern. It's the same idea that momentum is hard to stop. It's the same idea that when you have that momentum, you can find an area inside of triggers. Your live read. The market has momentum. The market has the potential to break. And guys, look at it. There's an area right inside of trigger lines. And if I get a pullback, that one line inside of triggers is where the market is most likely to bounce and continue down with all this momentum. That's what it looks like. That is how you can call your shots. But if you don't learn momentum, if you don't understand path, you may or may not have the courage to pull the trigger. You guys want to see if it hits it? Now there's a challenge because that divergence low only has the potential to break. That divergence right here, that loss of momentum says, hey, we're losing a little bit of steam and it's only the potential. And this trade would not fit the KISS plan. So I'm going to take this trade live. My expectation is that they may push higher, that they may take me out of this position, that it may hit my stop, because this divergence right here is one of the absolute biggest killers when it has the potential to break. Cancel, stop. And if you were following the KISS plan, you would cancel that order. We'll watch it. This line, where the market is most likely to continue, is where you would have your limit order if you were choosing to take this trade. Doesn't guarantee an entry, doesn't guarantee a winner, but with all of that momentum and the potential to break, your target would be Fibonacci support down here. You would know about it. That's where the market is likely to go. That's where the market is likely to continue. And up here is where the market is likely to stop. Bounced right off an area inside of triggers, didn't it? So Daniel 3, this is what you're learning right now. Kerwin, That's what you're trying to recognize right now. If you're new with me, that's your pattern. It's not high probability. The area is not broken. But so far, momentum's winning. What do you guys think? That's it. It just happened live in front of you. Everything that we just talked about. Learn this pattern, learn to trust this pattern, and eventually that will probably be your trade. You'll probably take quick profits somewhere around the divergence low. You'll look to take second profits right around 98 at Fibonacci support. Pretty cool, right? How did I know that's where it was going to bounce? Because I learned a pattern. That's where the market is likely to continue. How did I know that divergence low is my first sign of trouble? Well, because that was a loss of momentum. How do I know the market's likely to go to Fibonacci support? I don't. Look how that divergence low created a problem. Pretty cool, right? I knew about it. I could have gotten paid at it. Guys, when you learn your plan, oh, did it really pull right back to an area inside of triggers and continue down? What are the odds? Did it really go to Fibonacci support? Guys, this is where you call your client advisor with your credit card and say, oh shit, I got to learn this. He just told me exactly what the market was going to do. He knew exactly where it was going to do it, and he knew exactly where it was likely to go. How did he do it? Well, because he bought or sold a pullback at an area inside of triggers. And he did it when he had momentum. Guys, the market's predictable if you have a plan. Any questions as I drop the mic and go to TradingView? I love it. I love what I do. TradingView is not NinjaTrader. Good morning, Andy Man. Not one wow, not one whoa, not one man. That's pretty freaking awesome. I can't wait to learn the software. That floors me that you guys are not impressed. Are you not entertained? That's okay. Trade on TradingView is only 3 rules, guys. It's a clear path, followed by a clear path with very specific entry rules. That's it. TradingView uses 2 charts to find those 3 rules. Just in time for TV. Thank you, Cedeno. I'm still floored. I still get floored, just excited when I see how well the methodology works. I really do. True story. Guys, TradingView uses a 15-minute chart as the big chart. The slow chart, right? The large crowd. It's going to define direction. It's going to help you define momentum. It's going to show you key targets. It's going to talk about termination conditions. Your 1-minute chart is just an entry chart. This is where we need the fight. There is this gospel truth that I have found. Let me get an arrow. Pay no mind to the background. The market trades in a trend. Somebody fights. Nexgen users go, hell yeah. And then it typically continues. Daniel, I have a lot of fun with what I do. I really do. And I'm probably an HR nightmare. I realize that. But I'm pretty damn good at teaching you to read indicators. The market trends. Somebody fights. You guys say, oh my gosh, rules met, go, 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 go. And then the big crowd takes back over. You have no control, but you can define direction, momentum, and areas. You can define entry. All right, guys, this is where the PowerPoint changed. So Papa Giorgio, I hope you dig this. You guys learn in TradingView. Give me some feedback. Big chart, little chart. Your large chart only has 1 set of triggers. When they're cyan, they're up. When they're white, they're down. Guys, if you can't tell up from down, I'm going to find some study material for you. But usually this is pretty easy. If you blow bubbles, follow the bubbles. That's up. If you blow bubbles and they hit you in the face, you're blowing the bubbles down. Up and down. This is your large chart triggers. Your small chart triggers get complicated. There's 2 sets. There's small and there's large. That's it. We're going to define some momentum, guys. So 100%, you guys are familiar with this. If you're making the transition, Small triggers, large triggers. Don't have to know how they're made. Areas, right? Divergence highs, divergence lows, one-to-ones, mid-band. This should all be familiar. Outer bands are a little different. Outer bands can behave as termination conditions. Outer bands can be targets the same way these areas are. On a big chart, this is where the market can stop. On a small chart, this is where the market can stop. Now, a lot of you have Chart Prime. I had pictures. Let me figure out where I put my pictures. Darn it, heck, shoot, dang. TV, simple, simple, simple. My goodness. I do way too much stuff. That's what I'm realizing right now. I do too much stuff. Let me open up this right here. There we go. This is the trading view indicators. Zoom, baby. Triggers, areas, you got mid bands, you've got divergence, you've got one-to-ones. All right, so here's what I wanted you guys to see. Now on Chart Prime, you'll see areas of supply and demand, red and green boxes. These behave like fibs. Trade to them. Trade away from them. Don't trade into them. Somebody asked me once, Mark, what's the difference between trading to and trading into an area? Guys, if you walk towards the door, you're walking to the door. If you open the door into your face, you walked into the door. Big difference, right? Some of you have the flux chart support and resistance. Greenish lines of support, reddish lines of resistance. Guys, they can all stop a market. They really can. They can all stop a market. You have to believe these are where decisions are made. So watch how easy the trend trade rules are. Rule number 1 says that your 15-minute chart is not trading directly into an area. Why? Because areas can stop a market. Rule number 2 says that your 1-minute area is not trading directly into an area. This guy is abusing that dead horse. Don't trade into areas. 90% of you will trade into areas hoping to win. 99% of you, let's be honest, 104% of you will trade into areas hoping they break. The majority of you will be unsuccessful. Your entry rules: buy or sell a pullback at an area. Areas create bounces, zones, one-to-ones, mid-bands. But here's the difference. We're going to close on the weak side of small triggers, and I'm going to show you what that means. But first, let's go through the rules one by one. When we get to the entry, feel free to be amazed. Once again, direction is defined by the 15-minute small triggers, or the 15-minute triggers, if you will. They're either going up or they're going down. And if they're going up, I'm only looking for rules to be met for high probability for trend trades long, just for trend trades long. And if they're going down, I'm only looking for rules to be met for shorts. Up, down, long, short. That's my only option as a brand new user. But Mark, aren't there options to go short when the triggers are up? Of course there are. But if you can't do it easy, stop trying to do it hard. Everybody good with that? Easiest lesson, up or down. It gets better. Rule number 1 says, make sure you have room to targets, not trading directly into areas. So check it out. The triggers are up. I'm looking for up. I've got room to trouble. How easy. Do you guys see that big void with nothing? That's room to targets. Large chart rules are met. You're done with it. Triggers say up. I've got room. Done with the 15-minute. Rule number 2. 1 minute not trading directly into areas. Here it is again. Absolutely nothing in the way before you hit the next spot. Here, it traded into an area. Look at the bounce. Here it traded into the area. Look at the bounce. Here it traded into the area. Look at the bounce. Into the area, look at the bounce. I need room to targets. Is everybody good with that? Room on the big chart, room on the small chart. Did you guys know that there will be times where there's not room on the small chart? There will be times where you can't find a clear path. Do you know what that means? I'm going to tell you. I'm going to let you in on a secret. It means your rules aren't met. If you choose, you can not take a trade. Or you can break your rules. Shame, shame. Everybody knows your name. So guys, if I have room, let's go define an entry. So when everything says up, this would be a long trade. When the large chart says up, when the large chart has room to trouble, you're going to see these small triggers on the 1 minute turn down. And this is the happy moment. This is where the buyers have lost their steam for a moment. This is where the sellers have said, we really want it to go down, buyers. We know that the large chart says up. We know there's nothing in the way, but we're pretty eager to get down here and either join you or something, right? And you're going to say, let me find an area. Let me find a mid band. Let me find a zone. Let me find a 1-to-1 lower. And when they get there, I'm not just going to jump in. Guys, a 1 minute chart is a pretty rowdy chart. These small triggers define the immediate momentum. The easiest entry you will ever take will be an up bar that finishes both corners above those small triggers. And what you're seeing, and let's take a picture because I like to make up stories. The buyers are in control, right? The sellers say, but we really want to go down, buyers, and they go headfirst into an area, and the buyers take back over. And that reversal bar that closes above the small triggers, that's where the buyers take control again, which means you can identify where the sellers fail. You can identify, where the market shouldn't go. The fight is over. Stop placement. If the tables were turned and the sellers were in control and the buyers are pushing up, it would take a down bar on what we call the weak side of those triggers to start the push down. You won't win the fight against the small triggers. I'm just telling you right now, you'll get lucky every now and then. Oh, I'm going to get in at the area. I'm just going to jump in right at the area. Well, it might work every now and then, but that's your entry. The large chart says up. There's room to targets. You're in transition. We're going to talk about what that means. There's your trigger roll. There's your pullback. Do you guys see how it didn't make the area here? Give me a Y if you see that, TradingView users. That space, that is a great void. There's nothing bouncy there. What happens? They push to the bouncy thing like they typically do. There's your up bar that finishes on the weak side of the triggers. There is the market getting back in tune with the buyers. Large chart says down. Large chart has room to trouble. I'm done with the large chart. Small chart, triggers roll. There's my area. No close. There's my area. That's an up bar. Hell, I don't even know what bar that is, but there's the down bar that closes on the weak side of the triggers. That's where the market gets back in sync with the big chart. Guys, the high probability trend trade, the trend trade here, you guys are telling me. I'm not telling you. You guys are telling me. This is a trade that's producing right around 70% winners for you. Great entries create manageable trades. Great entries reduce risk. Great entries increase profit potential. So how do we manage? Let's take the guesswork out. Does everybody see triggers up? Yes, absolutely you do. I'll speak for you. I'll be your lawyer today. Here's the most current price right there, 25,481.50. Does everyone see that I have room back to trouble? Can we say that the large chart rules are met? They're up, Victor. Until they're down, they're up. Does that make sense? So they're up, and I have room to targets. Guys, you're going to know how to manage your trade before you ever enter. So management starts by comparing the most current price and where it is in relationship to those small triggers. There's only three options. It's either below them, inside of them, or above them. And more specifically, price will either be left, inside, or right of the triggers. Whether it's an uptrend or a downtrend, it will either be left of, inside, or right of. If I'm left of the small triggers, this is the strong side. This is where 1 minute areas are more likely to break. Not obligated to break. I'm not telling you to break rule number 2, but this is where I'm going to hold for bigger moves. This is where I'm going to say something clever, like from the strong side of the triggers, I'm going to see if I can make it up to the resistance. Now, if I'm below the triggers, as I am here, I'm on the weak side of the triggers. Do you guys remember where reversals come from on the small chart? Weak side of the triggers? They come from the weak side of the triggers on the large chart too. So if I'm on the weak side of the triggers, my 1 minute areas are more likely to bounce. Guys, this is my get in because I'm still looking for long trades. Get in because I still have room to targets. Get in because my rules are met. But when I reach a 1 minute area, I'm going to GTFO. I'm going to take the money. I'm going to wait for the next trade because it is less likely to break. It is more likely to bounce. I knew it before I ever entered. And if I'm in transition, this is my split targets. This is where I might take partial here at the first sign of trouble, but I'll let one of them run. I'll let them go just a little bit further because I'm in transition. And this is where split targets make sense. Get paid, get to break even, but who knows? It may go from transition up to that strong and then just keep pushing. So guys, you'll know how you're going to manage before you ever get in. You're going to know exactly what your entry looks like before you ever take it. All you have to do is learn 3 rules. Let them come to fruition on 2 charts. So get to break even. That's a great question. Whoops. Let's do it. Let's show you what break even means. You ready? Dun, 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 dun. Let's see what we're doing. Triggers are down. I'm strong side of the triggers. And I do have room to trouble. Do you see it? Papa Giorgio? What do I need? I need a close below small triggers to enter the trade. Wouldn't you agree? So if I take a trade, let me get off my live account. We'll come back to it. We'll take trades in the live account because I trust the plan that much. So since I'm paper trading, I'm not taking a real trade. If I go short, boy, that seems silly with all that up, right? Let me see if the S&P is giving a better opportunity. I need at least a little bit of room to run so that we have time to get to break even. Let's just do this. If I enter the market and my profit target is up here, as the market runs away and my stop loss is down here, I might say, hey, I've reached trouble. I'm going to put my risk to absolute 0. So no matter what happens now, Papa Giorgio, I can't lose money. So I could take, let's say, I take 2 contracts off here. Boom, I'm out 2 contracts. I have absolutely nothing to lose. That's break even. And now it either goes or it doesn't, right? And who cares? I can't lose. So break even is a way to control your losses when something gets hit. So John took the long trade from the termination. And as he gets into trouble, he took half of his contracts off and he got to break even. He said, no more risk for me because I'm fighting the large chart. This is a beautiful trade, John Novak. Does that make sense, Papa Giorgio? So if it were transition, you would say, let's just do it like this. Sometimes it's easier if the market isn't moving. Let's say this is our entry right here. And this is the first sign of trouble. So after my entry, when I reach trouble, I have to make a decision. Do I exit all of my position? That's the first option, right? So if I'm on the weak side, I might exit completely. I can take partial profits, so maybe 2 of 4 contracts, and I will move my stop, my protective stop that started out where the market shouldn't go, right? And this is our entry right here. My initial stop was where the market shouldn't go, Papa Giorgio. But when I got to trouble, I said, man, trouble could create a bounce. Let me move my stop so I am at a 0 loss level. I can't lose. My worst case scenario is $0. So if the market comes back off of trouble and hits my stop, I don't lose. And if it continues up, I might move my stop again. I may be break even plus a little bit. So the stops and targets, the stops are dynamic. The targets are dynamic, right? So when it hit this trouble, if I was at break even, it got me. It took me out of the trade with absolutely no loss. And now the market's going back down with the trigger lines. Does that help a little bit? So you're going to enter, and there's a place for stops. John went short. He took half of his profits at trouble. And see his stop loss right there? John says, if trouble stops the market, I choose. Yeah, that was counter trend, Boaz. It wasn't a trade that we were taking. It was a lesson on stop placement. And guys, that brings me to an important thing. This is an educational room. There will be times when I am knee deep in jackassery to give a lesson. Don't do what I do in this room. It's an educational room. Sometimes we have to enter silly trades so that we can give good lessons. Does that make sense? Embrace that. So Papa Giorgio, you're in control of stops. So if I go long right here, I'm going to go long 2 contracts. Not saying this is a trade. It's not letting me go long. Would you just go long? There we go. I'm probably going to be in 50. I'll put my stop loss where I believe the market shouldn't go. I'll put my profit targets where I believe the market is headed. And as this market moves, I can move my stop all day long. So if the market goes up, I can go up with it. Ideally, you never increase risk hoping a trade does something. We're better than that. So as it gets up into trouble and I'm up $450, maybe I go break even. Worst case scenario is I don't lose any money. And as it goes up, I can move my stop again. Okay, if they get below this zone, I don't want to be in it. Now they're getting into trouble again, right? Maybe I just want to take profits because it's counter trend. Guys, this is what we call an HVA trade. When a termination condition says absolutely no more shorts, when your small triggers get above your large triggers, when the market pulls back to this green HVA line, There's a plan for it. Does that make sense? Does that help a little more visually? Yeah, you're in control of everything. It's pretty awesome to have that level of control. So, small's below the large. The background is red. The colors don't match. I don't have momentum. Give me a Y, NinjaTrader users. Do you see it? No matter what the market does right now, I don't have the momentum I need to look for rule number 2. Price reached a divergence high and one-to-ones. All of my triggers are below. Stop sign, stop sign. So I don't have momentum. I don't have a clear path. Oh, why would I look here? Remember when you were young in 7th grade and you dated that really cute girl and she broke up with you for the football player and your mom put her arm around you and said, it's okay. They're like fish. There's so many in the sea, right? It's like a bus, another one's coming along. You don't have to trade into termination conditions, guys. You don't have to trade without momentum. Your plan is designed to keep you safe. Your plan is designed to keep you from making bad decisions. And if you learn the 3 rules, if you learn momentum, whoops. If you learn clear path, if you learn to define your entry, you have the keys to the kingdom. You have the golden goose. Do not turn it into fried chicken, as my brother says. Does it mean the market won't go up? No. But it means that you didn't have to take that loser. And guys, what you will find, in my experience, in over half a decade of doing this, is that the successful traders aren't the traders that take all the wins. The successful traders are the people that don't take this loss, that don't take this loss, that don't take this loss. And because they're busy doing nothing, maybe they took that win, right? Maybe they took that win that we watched live. So they're not forcing their wins to undo the damage. Pretty cool. All right, guys, that's my first hour. It's the same hour pretty much every day. It's momentum, path, and entry. This is where we're going to get into the second half. And what we're going to do in the second half is I'm going to click on the links that you guys are posting in the room. And you're going to tell me what you saw. Trina's going to say something clever like, Mark, look, it was up. And I was on the strong side. And I had room to trouble. And then, Mark, I don't know if you knew this was a thing, but there's my pullback to an area. And there's my close above. And Mark, you can tell that I waited for the close because my entry is on the next chart. And there's my first target way up here from the strong side. And there's my second target. And from 48 to 51 is 300. And from 48 to 52 is 400. And Trina said, Mark, I don't know if you know this, but just taking trend trades is pretty kick-ass. And there's a lot of money to be made if you just wait for the rules to be met. Trina, virtual high five. And why did you hold here? You had areas, right? Because it was the strong side, Mark. Because this is where bigger moves happen. Because this is where areas are more likely to break. And I was already break even going into it. Trina, you are a rock star. So guys, we're going to go through and we're going to do this for every chart posted in the room. So here's what I ask. I don't ask a lot of you guys. If you post in my room, no, not if you post in my room, when you post in my room, I'm not giving you guys the option not to post. If you want to be good at this, we have to talk a little bit. If you are on NinjaTrader, I want you to talk about the momentum that you saw. I'm going to encourage you to write why the rules were met. Not just that they were, but describe the look that gives you the advantage. And then I want you to go to termination conditions, and I want you to describe why it was a termination, why it was a potential to break. And I want you to use those clever language. Sold a pullback at an area inside of triggers. Show me what you did. And what happens is I'm going to make sure that you're reading the indicators properly. And I'm also going to say, well, you misread that. Let's talk about it. Let's fix it. Well, that wasn't a clear path. It was only the potential. Let's talk about it. Let's fix it. Your entry's a little late. Your entry's a little early. Your stop didn't make sense. Let's talk about it so you can be a better trader in the morning. So if you do this for me, not only are you telling me how you're reading the indicators, you are literally reinforcing your rules and you're writing a recipe for success that's going to carry you to the promised land. If you're on TradingView, I want you to describe direction. I want you to get into the habit of knowing how you're going to manage a trade before you ever enter. And I want you to insist on room to targets. Tell me what you saw. Describe your entry. Small triggers rolled up, so I need a pull back to an area. I need a close below. Boom, boom, boom. You're writing a recipe for success. You're making it repeatable. You're making it testable. You're making it verifiable. 90% of your day is doing nothing, guys. Trina, was it worth all of the doing nothing? I think so, right? I think so. Uh-oh, and here comes John. John likes to jump in and steal my thunder, so I'm going to go take a break for 5 minutes. When I come back, guys, we'll start looking at the charts. So go stretch your legs. I'll see you guys in 5. right, guys, let's get back to it. I love this. John Novak is posting tons. Guys, this is the CEO. This is the guy that wrote the software. This is the guy that has more knowledge about what the market does than most people. And all he's doing is he's saying, check it out. This is a pattern that I've recognized. This is what I've seen. These are things that when you learn some very basics, you'll be able to find a way to do more. But guys, if you don't know the very basics, pretty much everything John Novak tells you is going to confuse the ever-loving snot out of you. And that's okay. That's just kind of how it works. So you got to get there. You got to build that foundation. You got to create that recognition of advantages. And man, just turn those into some of the good stuff. So Paul, we're going to go through, click on a bunch of yours. Pete, we're going to go through, click on a bunch of yours. Guys, I'm going to remind you that the market is, like, people see it different. People react different. People have different plans. People are in different places. If you ask 10 people to draw a flower, you're going to get 10 different flowers, guys. It's okay. Trading's like that. Find your thing. Use the advantages. Get to where you want to be, what's comfortable for you, and then grow from that point. So until you can do that, I give you guys the KISS plan. I give you the foundation. I give you the super basic, high probability. And then what you're going to find is that there's a lot of people doing a lot of stuff outside of the high probability trend trade. Don't be the trade police. That's it. Grow your garden, right? Stop thinking it will only take a week or two. I remember that. I love that. Four-year college graduate. Starting pay varies wildly by major, but generally ranges between 40 and 80,000. Or learn to day trade. All right, here we go. First one. Does this pullback and close above small triggers VWAP zone qualify as a trend trade? It is a bit of a prairie dog. There's room, not much room. Odds favorable, momentum is in play. If it does not qualify due to room, would it qualify if there were more room? So Paul, it does not. And guys, I'm going to go through a very basic lesson defining support and resistance on TradingView. And I guess we'll do this real quick before. And I'll just take a picture of this picture. In order for TradingView to change its role, so the market's coming up and it reaches resistance. And guys, resistance remains resistance until you get a bar where the whole body breaks above. Then resistance becomes support, and it remains support until you get a whole body below it, and then it becomes resistance. And there's this phenomenon that new users love on TradingView, and I call it the prairie dog. And I call it the prairie dog because I'm going to show you. I'm just going to do it like this. Because price can come down, and even though it peaks its head below that area of support, it never breaks away. It always remains support, and guys, this is a huge source of losers. This qualifies as trading into an area. Peaks its head above, resistance is still resistance. This is not a reason to enter the market, guys. This is what we call the prairie dog. And you guys showed me so many losers with this look that I created a lesson for it. I'll drop it in the room for you. There's the PowerPoint. That'll keep you out of an awful lot of trouble. So Paul, not a break, not coming from support. If anything, it is relying on momentum and hoping it goes. That's it. It's a pretty good look. But you're into the VWAP, right? You're into one-to-ones. You haven't broken support. You're in a range. A lot of challenges there, but not considered broken. And then it's perfect. Everything is up, transition, pull back to the area, close above, giddy up. Perfect trade, Paul. This is just some study. We'll go through it quick. Everything says up, pull back to the area, close above, easy trade. Do you see it? Up, room, pull back, close above, giddy up. Easy peasy. Now here we go again. Everything is up, room to trouble. Here's the pullback to support, the close above, and it goes right to trouble. And then it pulls back to support. Because, John, you have a very type A analytical mind and fake out, breakout makes sense to you. I am artsy fartsy, and the idea of picturing a prairie dog makes sense to me. That's the only reason. When I think fake out, breakout, John, when I think fake out, breakout, I think of a market that's been consolidating, and you think they're going to break out above, and that was your fake out. You're like, oh, I've got momentum and potential to break. Here we go. And then the sellers say, nope, we just wanted a better price. That's what I consider a fake out, breakout. Term to term to term to term to term. You think it's going to go, and then it doesn't. That might be my own little understanding. Does that make sense? Different platform, we'll just call it prairie dog. It could be fake out, breakout, but it never even like really faked the breakout. That one had room. That's the prairie dog again. And this bar is the exact same bar as that bar. And this bar actually had worse trigger look than this bar, and it doesn't work. And this one works. Bob Cobb, breakout bar confirmation. John, you're using up your hot spot. You should probably go throw the frisbee with the dogs. I don't want you to run out of data. So the exact same look. It's the prairie dog. Here it fails miserably. Here it works. Here the trigger's supported. Here the triggers don't, right? So it's going to work every now and then. Will it work more than it doesn't? The answer that I have found thus far is no, not yet. Haven't found a way to make it work. No worries, Chariot. Weak bottom, strong triggers. Pete, you take the first trend trade, out at trouble, out with a loss of momentum. Market comes back, gives another opportunity. It's into a fib, so you manage assertively. Really nicely done, Pete. Everything is momentum, guys. When momentum leads the way, it's hard to stop. Strong top, everything down. There's the first one, pulls back to the area inside of triggers. Never goes where the market shouldn't. Gets paid, gets paid. Market comes back right to the areas. Gets paid, gets paid. In the case, maybe a dump, then pump. Man, Justin, I think pump and dump you see in crypto where they'll spike it up $100. And then when everybody starts to buy, they get rid of it. I think this is maybe too small time frame to qualify. I don't know though. It might be like a mini version of it. Always leave one in case you get a runner. Pull back to the area inside of triggers, out at trouble. Pull back at the area inside of triggers. Get out at trouble. Let one run all the way down to Fibonacci support. Great trading, Pete. It all starts with momentum and path, guys. There it is. Pull back to the area on the wrong side of the triggers. But everything says up. There's nothing in the way. Pete says, I'm willing to give it a shot. I'll manage it assertively. I won't hope for a home run because it's no longer the perfect trade. He knows what he's up against. He knows what's working for him. And he makes the choice to take and manage. And guys, that is experience coming in. Potential to break. Pull back to the area inside of triggers. Get out of trouble because it's only potential. Now I'm going through Pete's kind of quick. Pete doesn't need feedback. But what I want you guys to see is that every trade that he's taken has begun with momentum. And because he has a market where the odds are favorable for it to continue, because he has a market that's difficult to stop, it makes it easy for him to get in, to take some chances here and there, to take trades and to manage because of the momentum. And that's one of the things. Good job, John. Show a picture, annotate a chart. Guys, do not do what people say in the room. If somebody screams out trend trade short, don't go short. He might have been drinking. You don't know. Medicinal weed is legal in Florida. You don't know what somebody's doing. Remember that. I've seen people make a lot of bad mistakes like that. Everything is up, room to trouble, pull back to the area, close above, easy money. Do you guys see it? Same one, right? Awesome, Paul. Same look, same entry. It didn't make it, it made it. It closed above, it continued with the large chart. Did you guys know that trading doesn't have to be difficult? Did you know that it doesn't have to be complicated, that it doesn't have to be 700 indicators and 800 time frames and CNN in one quarter and Fox in the other and BBC in another? And guys, it's just momentum, path, and entry. When everything says up and there's room to trouble, get in on the good side of triggers. Get out of trouble. Oil inventories in 3. Thank you, Pete. And sometimes you just won't even know, right? There's the long, out of trouble. We saw that one. Now, guys, if your large triggers have absolutely no zip to them, you don't have momentum. Those are flat, like a pancake. But there is room to trouble. The small triggers are coming down strong. He does have momentum on the small chart. This is a great read. So he chooses to go down to trouble. Room to trouble. A little more assertive, Pete, but really nicely done. Strong up, pull back to the area, close above, out at trouble. Who is it? That looks like Trina's charts. Maybe not, though. Up, strong, room. Who is this? Love it. Great job. Up, strong, room. What an easy annotation, right? Triggers below, a little room, out of trouble. I mean, my goodness. What a great trade. Easy peasy. Of the lemon squeezy variety. This is definition of chop. Nothing to do. They can't figure out which way to go. You don't have to guess. Let them figure it out. Let them figure it out and then just hop on the train. Save some resources. 15-minute down. Strong side, room to trouble. This is not a trend trade, but it has momentum and an entry, not a clear path. It's got some room. But it's not from an area, Paul. I think this was Paul. It doesn't have, well, it has momentum up. Wouldn't we agree? Small's above the large. So this says down. This says up. They don't agree. There's not an area, right? That would be your close below to get back in sync. But this is support. This is a wonderful example of I saw what the market did after, so I decided that this must be a trade. Now help me out here, guys. This is a good lesson as you study. Triggers are down. Strong side, clear, 100%, right? I'm going to write out the entry rules. Pull back to an area, close below smalls with room to trouble, or grubble, if you will. What's your area? This is the one. What's the area? I don't have one. So that can't be a part of it, right? It is a close below smalls, without a doubt, somewhere in the 41 range. And it's got $80 before it hits trouble per contract. Room to trouble is something that you're going to have to define yourself. If 80 is enough, awesome, then without a doubt. But there is no area, right? You had your area already circled. And I know that sometimes it's going to go. Sometimes it's going to go. Is it going to go more often than it doesn't? It worked this time. But it's not uncommon to see them stutter and then make it and then drop, especially with strong triggers up like that. And I almost think John Novak and I were talking, and he's like, man, that might be a long. That might be one of my longs right there. Pete, momentum style trade, out at trouble, out with a loss of momentum. Directly into a termination, but with strength, you take the nice entry on the way down and get back out at trouble. Momentum will allow you to change your plan up a little bit, but you've got to have rules. Nicely done, Pete. Once again, momentum. Like 10 for 10 on the momentum, I think. Momentum. Holy smokes. Just jump the fudge in. Make the momentum. Large chart had momentum and room to trouble. Small chart, he waits to get below trouble and take it down to large chart trouble. Beautiful. Momentum and path. Strong top, triggers rolled, momentum. Prices on the wrong side of the triggers, where the market shouldn't go. Worked out for you, Pete. It didn't go all the way up to one-to-ones or a mid-band. And you get paid on the way down. Lucky. I don't disagree. Wayne, back on Ninja Trader. Momentum to the upside. Not on the first run, but there's that white bar trade that John talks about. Double dips, gets out. Double dips, gets out. Outstanding, Wayne. Rinko seems fast after some trading view, doesn't it? Flat triggers, win percentage went to 50%. Did you go short or long here? Okay, so there's a long. In at 42, make a couple bucks. Tried to go long again, didn't work, got stopped out. Tried to go long again, didn't work. Maybe made a couple ticks. Absolutely no areas to trade from. I'm not sure whose this was. Whose chart am I looking at here? Help me out, guys. I think we saw Wayne's. Boaz, is that you? Learning Trading View? This is Wayne's? No areas. Just no areas. I mean, up was the right call. There's no doubt about it. Just nothing for it to bounce from. That's the challenge. And it looks like they went down to find something to bounce from. And then they finished their move. Good stuff, Wayne. All the momentum. Pull back to the area. In on the reversal bar. Out at trouble. What an outstanding trade, Boaz. I recognize this one. All the momentum. Nothing in the way. Pull back to the area inside of triggers. All the way to trouble. Beautiful, beautiful trade. I think I took the same one on the NASDAQ at the same time. All the momentum, nothing in the way, pull back to the area inside of triggers, out at trouble. Boaz, do you and Pete talk on Messenger and say, hey, here it comes, there's momentum and path? Pete, do you and Boaz say, hey, look at all the momentum and path, let's get in at the mid-band? No? So you're telling me you guys found a recipe for success that is so awe-inspiring that you take the same darn trades from different locations, different backgrounds? That's day trading because it has an edge. because this pattern provides an advantage. Both of you, virtual high fives. Miss Trina, we saw that one. Beautiful. Let's see what we did here. Down, transition, room to targets. There's the close below, and it's way below, but it gives you room to trouble, and you do make money. And then John came in with the lesson, and I knew exactly what John was going to talk about. The market pulled back to 40, Trina, and you don't have to do this, right? That white bar right there, when the next bar opens below, is a really powerful signal. And when you get it from a termination condition, it's a good way to get closer to the edge. John's got an amazing video on it. Let me find it. You don't have to look at it because, let's be honest, it may not be a trade that you want to take, right? And it didn't fit your rules, Trina. That's the thing, is it didn't fit your rules. It's okay. You don't have to take it. But if you want to study that white bar pattern, it's a good one. There's a lot of opportunity that comes straight from that white bar. And let's see what John's coaching was on it. If I'm committed to shorts, the white paint bar, the pullback to the area, it's an early entry for him. And he identifies that it is an early entry. But 100% committed to shorts at this point. So he uses that. That's like his cheat code. It's pretty cool. And yeah, without a termination on the 15 supporting it, it's just trading a white bar, and it doesn't work out typically as much as you'd like it to. All right, Papa Grigio, let's see what we got. Giorgio, Grigio, I'm just making up words at this point for you. Momentum down, trend, room with support, pull back to the midband, close below. Saw two pullbacks close below small triggers, set the limit at 21. Between small and large triggers, take profit, originally set at next band. Top of highest wick. Once profitable, I move stop loss past break even to lock in profits. There you go. Testing that one. Call him Rusty. Testing that one. So, Papa, as you're learning, do you see how that wasn't an area? It wasn't a mid band. It wasn't a zone, anything like that. That one got within a tick. That's your entry. And then once you get in, we're looking for outer bands, and depending on the large chart, support is beautiful as well. Nice trade. And you'll learn how to get more out of these with a little more time in the saddle. But it fit the rules perfectly, and great patience on the first one. And then your question on this one is how many? Saw two pullbacks. How many what are we looking for, Papa? From 21.75, you had 21 points to trouble, right? You get in at 21.75. You're out at 04. 17 points, $340 a contract. Very nice. I've never been mad about a $300 trade, ever. Nicely done. Does that make sense, though? Getting up to those areas helps. Because a lot of times they'll fake you out and then get up there anyway. They know where they are. Guys, the people that move the market, they know where the one-to-ones are. They know where the fibs are. They know exactly where they are. And you can predict where the market is most likely to go, where it's most likely to stop, and where it's most likely to continue with a very simple process. Good stuff. All right. That's all the pictures, I think. Nope, it's not. John Novak. Let's see what John did. John said everything is down. There's my pullback to the area. Didn't wait for the close below. That's okay. Half off at trouble. Looking for the 15-minute big target. Made it. You guys want to know what one of the challenges are when new users see stuff like this? And I've gotten angry emails about it. John Novak did not wait for the close below. He broke rules, right? Is anyone thinking that? John didn't wait for the close below. John's breaking rules. Don't be the trade police. John Novak followed John Novak's rules. His plan, not your plan. Plans are individual. They are not collective, guys. I hand you a plan designed to optimize your chances of success. You have a higher chance of success as a brand new user waiting for a close on the correct side of the triggers. Why? It keeps you out of the fight. Eventually, you're going to say, this is my freaking area. I'm going. I got a market flow signal from the area, most likely to stop the market to go with the trend. I'm taking the trade. And guys, that's the wonderful thing about trading, is you start in this little shell of conservatism, and then you start to blossom and you start to grow and you start to see more and you start to do more. And John Novak not only created the foundation, but he laid a huge foundation. And he's got like 30 years of reading indicators. Don't try to be John Novak on day one. White bar opens below HVA lines. There's your target, John says. But that's the same pattern. Doesn't fit her rules though, John. And because it doesn't fit her rules about trading into areas, she may not be inclined to follow your path. Maybe one day. Absolutely. Guys, until you have the basics down, and Trina, you do have the basics down. You're trying to save it but can't? Here's the link to it. Maybe that'll help. We can do this. Oh, that's not the right picture. I'm sorry. Hold on. Let me open the link. Let me give you that. Let me give you that. Let's see if that's easier. I don't know why it would be, but I'll also give you the screencast link. We'll get it to you somehow, Miss Trina. There you go. There's the screencast link to the picture. You're welcome. Does everybody know who Mario Andretti is? Whew, look at that, right off a termination condition. Mario Andretti was, and I'm just showing my age, right? If somebody handed me Mario Andretti's car, I would put it into a wall almost instantly. I would get it, I would light up the tires, and I would be in a wall before halfway through the first lap. Wayne would probably make it around the track and have a really good time because we're in different spots. John Novak is the Mario Andretti of day trading. It's a lot to take in, Trina. And what happens is the more you try to take in before you're ready, just everything gets jumbled. And that's one of the reasons why when we talk about the plan, and Trina, just learn to tune John out. I do too. So if I learn the very basics and I take a high probability trend trade, I've got to think about 3 things on 2 charts, and I've got a very specific plan to manage it, right? I know exactly what it takes to get me in, and I know exactly how I'm going to manage it as a new user. I know, Wayne, that's why I said you would do well with it. Now, if I add something as a brand new user, here we go. So now I already have to think about these rules and how I'm going to manage that trade. And I've just added a whole new set of rules with a different type of management. Does that so now I'm thinking about a high probability trend trade, and I'm thinking about a medium probability trend trade. And if I confuse that a strong top isn't mandatory for the high probability trend trade, and I believe that it isn't necessary for the 50-50, I'm going to make a mistake. And if I let one divergence keep me out of a high probability trend trade, I've made a mistake. And if I don't get paid at trouble, I've made a mistake. And guys, the more you give yourselves to think about, the more room there is to create this little love child of rules, right? So, John, did you say it? If you can't make money with the easy stuff, you'll never make money with the difficult things. So make easy money first. Amen. If you can't find a way to get paid with a high probability trend trade, let's work on it. Let's get you there. Let's get you consistent. Nobody in the history of this checklist has ever shown me less than 70% winners. Take care, Wayne. Nobody's ever done it. Never shown me less than 70% winners. I'm not saying it can't be done, but I'm saying nobody's ever done it. But the thing is you got to learn. You've got to learn the basic rules. Estefania, everything says down. You get in below trouble. You get paid on the way down. When the momentum stops, you stop. Great job, Estefania. Momentum and potential to break. Jump the fudge in below trouble. Make some money. Get out when the momentum's gone. Momentum and path, guys. Those two things. Momentum and path will set you free. Momentum and path will open doors. Momentum and path will build plans. Momentum and path will get you thinking in terms of advantages. Have I mentioned learn momentum and path? Well, Mark, how am I supposed to learn momentum and path? I know a guy that has taken hundreds of pictures of rules being met. There you go. My gift to you. My gift to you, guys, a spreadsheet with strong triggers, with a clear path, with entries, all the rules met in green. Weak triggers, terminations, the rules not met in red. Client trades showing that same darn pattern over and over and over. Committing it to memory until it becomes easy. That's the path, guys. Chariot. Chariot says, check it out, Mark. The triggers are up. They're strong. Life is good. There's my pullback to support. There's my close above. There's me getting out of trouble, making money, high-fiving children in the front lawn, calling my wife to tell her I'm kind of a big deal. What a great trade, Chariot. Fire away. What's your question? And this is the cool thing, guys. You can ask a million questions. How come when I close out, do 3 cent, do 3, 4, it doesn't close my stops? Well, are you using, let's talk about who you're with. Are you trading with a prop firm like Apex? Are you using Nexgen Pro Trader funding? Are you in paper trading? I've got an answer. So if I'm paper trading, okay, no worries. So if I'm paper trading, are you using multiple stops? So let's say, Chariot, if I buy this termination condition. So you're putting your profit target way up here, right? Big run. And then you're saying something clever like, I'll take half contract right here. Hold on, let me go down. If it gets here, I'll take half a contract. And my stop loss is way down here, so it doesn't get hit for the lesson. Cool. So check it out. If it hits your stop loss or your target, the limit order that you put in place isn't a part of that order. You're going to have to cancel it out manually. And then the flip side of that is, whoops, let me get a couple contracts in there. Put the stop loss where it won't get hit. Put the profit target where it won't get hit. If I take partial contracts, watch this. So I'm in two. If one of them gets hit, my buy limit gets hit, then that one disappears. And then it'll adjust. And then if my stop gets hit, then it'll close the position. Or my target gets hit, then it'll close the position. And I'm putting them in the wrong spot, so it's not working. So if you activate a limit order mid-trade to take partial profits, but your stop loss gets hit, you're going to need to cancel that one out. So anytime you're doing partials, stop loss where the stop loss goes, always take your profit target and make that the furthest target. Does that make sense? Yeah, I've done that too. So I always put my target, the one from NinjaTrader, or I'm sorry, from TradingView, I always put it furthest away. And then I'll use this one for my partials. So that way, if it hits my stop loss, there's nothing in there. So it does it in paper trading. Closing my position here. Nexgen Pro Trader Funding will do the exact same thing. If you're using a company like Apex, they don't have it. Everything is limit orders, stops and targets. So you have to adjust contract sizes. You have to close the ones that aren't hit. If one gets hit, you have to go through and readjust your contract counts. It's a lot of work in Apex. Nexgen Pro Trader Funding makes it really easy. Would you repost it for me? I scrambled up a pretty good distance. I came up with that one. Would you mind reposting your first trade? Or we can all sit tight. I'll go see if I can find it. I'll probably beat you to it. We'll see. It's a race now. The problem is I've got 2 hours. Here we go. Is that the one? Nope. We've already seen that one. There it is. Got it, Chariot. Now I got you. I got you. Triggers up. They're weak. Pulls back to the midband. Goes well below the midband. There's your close on the correct side of the triggers. And it didn't quite make profits there, right? So you got, it looks like you took 2 off. And then it went long again. Yeah. So it hit your targets, but you still had a partial in there. Maybe it was your stop placement and it just put you right back into the trade. Yeah, I think we've all done that once or twice, maybe more. One of the reasons why I don't care for trading on Apex with TradingView. I just think it's more work than I want to think about. I'd rather use Nexgen Pro Trader. 2 trades in a row. That's all right. You'll get tired of doing it and stop eventually. You're teaching yourself to look for it right now. All right, Estefania, can I bother you with some stop advice management because I get stopped out more often than not, even though I believe I'm managing it. So Estefania, I've got a bag of groceries. What's in it? How am I going to cook them? There's not enough information. What kind of trades, Estefania? Are you talking about the trades where you just jump in hoping things go? Are you talking about trend trades? All right. So what kind of trade is this? What kind of trade is it? Where this says up, you've already hit trouble, and you just jump in, not one trigger line above it. That's not a trend trade, Estefania. This is a trend trade. Pull back to an area inside of triggers. This is just jumping in, hoping for the best, right? It's with the trend, but it's not a trend trade. It's not even a momentum trade. Your small triggers never even broke. Price never even broke. This trade right here is the equivalent of saying this is up strong. And then you saying, I'll just jump in and hope it doesn't stop. Right? Do you have rules for this trade? And if you have rules for this trade, will you give me the same picture with your rules and then I'll see if I can help. But if I'm just hoping that it doesn't stop, I'm probably doing what you did. I'm not letting it get far below this fib. But I don't have rules for this trade. Okay, so what do the rules say? With momentum. All right, here, I'm going to try and turn this into a pretty good lesson for you. Let's do this. I like this. I like this, Estefania. I think I'm going to be helpful. I hope I'm going to be helpful. Let me find a good picture. It's hard when it's one-way moving like this. All right, here's a great picture. And tell me if this doesn't make sense. See if I can make this a little bigger. All right, so when price hit, whoops. When price hit this fib and didn't break above it, it pushed down. Do you see it? When price hit this fib and price didn't break above it, it pushed down. When price hit this divergence high, it pushed down. When price hit this yellow 1-to-1, it pushed down. Price didn't get above this fib, it pushed down. So the idea, Estefania, is that if you really want to have a better chance of what you're trying to do working, let's go to the most current, because this is the exact same look, right? Momentum, it's up. Room to profit. Look what it's doing off of that pink line. Look what it did off of those 1-to-1s. Do you see it? So Estefania, if you want at least a fighting chance, you've got to get above anything that could create a bounce. And not just prairie dog peeking its head. You want to get a full bar above that divergence high. So let's see what happens. If we get a full bar above it, nope, still don't, right? These lines create bounces. It's trying. It's trying. So Estefania, one of the things that's missing in your methodology is the idea that you have to let the small chart get beyond anything that could create a bounce. See how it's still not going through? And there we go. It didn't make it. That's your entry right there. And look what it did. So what you run into is that if you don't get a full bar above, that's really likely to happen. Lines create bounces. Does that make sense? And I think that's the challenge that you're having, is you're trying to take these momentum style trades, which is awesome, but you still have to have a clear path. You still need to make sure that you've got room to get to where you're going. And here it's already been there and it stopped it cold, right? Here it's already been there and it just stopped it. And all of these little tails are little fights. And those are what are taking you out. Does that make sense? And there we go, the perfect momentum trade. All the momentum, nothing in the way. It breaks below the fib and it comes back and tests it, right? After it tests it, you jump in and it's easy money. Clear path. Huge difference. Do you see the difference between the two? Because I think what just happened is you just eliminated a lot of losers. But all you're doing is jumping in and saying, I hope it goes. Like, that's all this trade is. This is really strong. I sure hope it doesn't stop. That's all. It's not a trend trade, right? It's just, there's nothing in my way and it's really, really strong. I sure hope it doesn't stop. It's a good trade. And there's ways to make it better. Look what it did off that divergence low. Do you see it? Look at that bounce. Blah. And then once it gets below it, you don't have any room. And then once you get below that, you've got room. Pretty cool. They still haven't made it, even with all the momentum. Isn't that unbelievable? Are they going to do it this time, Estefania? What do you think? Let's see. There's the break above. Maybe I use a reversal bar because honestly, if I get a reversal bar, it has the potential to go down anyway. If I never get a reversal bar, it's more likely to go up than down. So I can keep reducing risk all the way. I can chase a reversal bar. No reason for huge targets. It's just a momentum trade. But once I got above that divergence high, I had a way better chance of this working out. Does that make sense? Doesn't guarantee a win. So if I get a reversal bar that closes below the triggers, it's likely to push down. If that never happens, Estefania, the market will go up. Let's see if there's any truth in it. There's the reversal bar, pushes a little lower. It's a pretty good lesson there. So how do you manage a trade that's 100% dependent on momentum? Embrace the momentum. Give it the clear path. Good stuff. And it does make it. And that was a little tight, but that's a good example. It makes it to the targets once we get through the things that can create a bounce. So now you would do the same thing, right? You have all of the momentum. I would never dream of taking a trade until it gets all the way through that line. Does that make sense? Would never dream of taking a trade directly into a line. Let's get that momentum, at least the potential to break. Doesn't even have potential on the large chart, even with momentum. So there's just no reason. Let's relax. Let's kick back. Let's wait. Let's see what happens. Good stuff. Whoa, whoopsie. And look at how termination conditions stop the market. It's unbelievable. You knew about this red line. You didn't have to trade directly into it. Larger up, smaller up, but the trend is down. I don't have momentum. I do have a clear path up, but I don't really have an opportunity. Termination one there. Weak triggers one there. Termination. Pretty cool, right? So you guys that are new, Daniel, hopefully some of the language is starting to make sense a little bit more. And it'll take a couple days for things to start to kick in. And then you start to see these patterns. Tesla nerd, same thing. Guys, it takes a while to be good at something, right? I watched a video this morning. I like to do a lot of video watching. I'm fascinated with the psychology of day trading. And one of the reasons most day traders quit is because they weren't rich and famous inside of 2 or 3 weeks. No worries. So Daniel, my email does work. Like if you have questions, don't be afraid to reach out to me. Let me drop it in the room. You can always message me on Discord as well. So as you learn the language and you're like, oh, I just need a little clarification, don't be afraid to reach out. Oops, I messed up the email there. Let me edit it. I forgot the number 3. And I think that's one of the things that a lot of people aren't taking advantage of is Nexgen is 100% committed to your success, to your education. And if you need help, all you have to do is ask. We gotcha. All right, Pablo, let's see what you did. Got my ass kicked. So triggers down, strong side. It had already been to trouble, right? I see it. Pulls back. Did that one actually close below? That one did. Just didn't work, huh? Just didn't work, Pablo. I think one of the... So trouble, a horizontal line, Daniel. Whether it's a zone, whether it's support, whether it's an outer band, whether it's divergence lows, whether it's one-to-one. When we talk about trouble, and you're on NinjaTrader, right? When we talk about trouble, I'm talking about these bad boys right here. These are the areas that the market knows about. These are the areas that are most likely to cause reversals. These are the areas where really the people in charge are making decisions. And they respect them because they create them through their past decisions. So if the market reaches trouble, and it did beautifully right here, Pablo took the shot in case they still wanted to go down. Didn't work. It just didn't work. And that's a whole lot of risk coming from the area that may stop the market. But it fits the rules. If it closed below, it fit the rules. Stop made sense. It just didn't go. And the reality is they don't always go, right? Possible low across the board. John's waiting for the high volume area trade. And the high volume area trade means that a termination was reached, that the smalls are above the large on the small chart, that this high volume area has been printed. And if the market pulls back to that high volume area, it's an opportunity to take a long if, in fact, this is going to be a low. It's counter trend. It fights triggers, right? This is kind of a one and done. So if they come back, that's kind of the, okay, highest concentration of buyers. On this one, if you're John Novak, somewhere down here where the market shouldn't go, below the trouble that you're hoping holds, pivot lows. At this point, my smalls are no longer above my large. I don't care for the trade. My rules say on the high volume area that the smalls have to be above the large. If you take it, you can put it right behind. How much are you willing to risk, right? How much are you willing to risk to go counter trend? So there's a perfect look and there's a not so perfect look. This would qualify. Small triggers down against you. If you took it, you could do it tight, right? You could wait. You could even wait for a close on the correct side. But the rules aren't met. They're just not met. Do you see how the smalls are below the large, Trina? That's rule number 2. Rule number 2 is no longer in play. I don't have to take that trade. Pablo says everything says down. I'll go down with it. Get some of my money back. Nicely done, Pablo. That's what you call keeping your head in the game. It's still down, right? It's a pullback to an area. It's a close below. Pablo has a metric shit ton of money to get back to trouble. What is trouble, Daniel? One of those lines. He gets in at 100. He's out at 79. 2 contracts, 21 points. $420 per contract. Great trade, Pablo. Do you guys see how forming an opinion about long trades would have kept him from taking the correct trend trade? Nicely done, man. And it's still going. Why? Because there's no reason to fight the triggers. They tell you which way the people in charge want it to go. So if you go counter trend, it's one and done. That's it, one and done. And then just let's get back on board with the people in charge. What a great lesson. Let's do it like systematically. I want you guys to see this. Sometimes the right trades won't work. Sometimes you'll have rules met for something counter trend. But if your simple rules are met, it's okay to take the simple trade. I love it. And I would say John probably didn't get into the HVA line because of the trigger location. Remember when I said fighting the small triggers rarely works? There it is. The problem, Trina, is if you are so hell-bent on taking that HVA long counter trend, you miss the perfect trend trade. That's the ES. If you were so adamant about taking the long, going counter trend, hoping to be the first one in, you miss the most beautiful trade ever from the strong side of the triggers, where 1 minute areas are most likely to break. There's a saying about opinions. I don't remember what it is. You guys feel free to Google it. When you get to the point to where it's either rules met or rules not met, guys, it's like having the chains pulled off. It's like having just amazing calmness. This doesn't fit my rules. I choose not to take it. This fits my rules. I'm obligated to take it. because my plan has been proven to win more than it loses. My plan creates an edge. My plan gives me the opportunity to win more than I lose. And I have the opportunity to make even more money the better I get at management. That is the foundation that Nexgen gives you. The very basic, the best of the best, the highest probability. We're in kindergarten. If you're brand new with me, you are eating paste and taking naps, right? Next year, you get on the playground. In a few years, you get to play sports. A couple years after that, you get to chase girls. Then you go to college and you start really learning. And you get out of college and they're still not going to let you build a bridge as a brand new engineer. You got to get the repetition. Guys, that's all trading is. You're learning a trade. Might as well make it the easy way. All right, I'm going to take a few minutes. There's your S&P. Weak triggers say the odds say anything could happen up or down, right? No areas inside of triggers say I don't know if, when, or where the market's going to stop. 3 divergences in the same price range is the only small chart termination condition out there. I wouldn't be surprised to see them at least come test the midband, if not further. So I'll leave you guys with that, and I'll be back in just a couple minutes. Well, they've made it to the midband and then a little bit beyond. They did pull back to an area inside of triggers. Right. Good stuff. Justin, let's see what you're doing. Man, look at the colors on that bad boy. Short at the 1-to-1, a little late, but wanted confirmation. Got nervous it was going to reverse. Bought at 10, out at trouble. Bought on the way down, out at trouble. I don't know if this is building a bad habit of not using fibs on a smaller chart, but really like using a large chart for terminations and key areas, using small chart for crossovers. Justin, what you have just done is embrace the John Novak school. There he is. John loves this stuff. Price reaches 1-to-1s and support. All the triggers are down. Sell it, right? There's your reversal bar closed below. Gives you room to trouble. It goes down. When it hits the 1-to-1s, get GTFO. Rolls from a termination, triggers go up with them to trouble. I mean, John loves this. John's working on his new plan, trade with 15-minute chart. And John, one of the things that Justin did is he's doing, oh, you're doing the 13-2, not the 21, Justin? But you still have the 8-2, which is a little different. Cool. I love it. You guys remember when I said you'll find your way? You'll find your way. Justin, you're finding your way. So let me show you something cool. I'm trying to get them both in the same picture. I'm going to use this one right here. If I'm anticipating, right, and your plan says, when I get here, look for the short, right? Do you remember that idea that as long as you are left of the small triggers, it's going up? And when you get below the small triggers, that's where you have a good shot of it going down, if the rules are met over here. The same is true here. So you can use that smaller chart, you can use that faster chart and say, you know what? I'm looking for the short. Let me get to the good side of the triggers. I'm in my long. Let me exit on the wrong side of the triggers, right? I'm looking for this fib to hold. Let me get in on the good side of the triggers. I'm anticipating 1-to-1s to hold. Let me get out on the other side of the triggers. Does all that make sense? So you're using a big picture really well, and then you're just using that small chart to refine entries. I love it. I know John loves it. John loves big moves, and he loves big chart termination conditions. So keep eyes on him. Good stuff, man. I hope that all made sense. And it looks like they've decided to go up. And the termination condition's holding. And then Trina, that's what we're talking about, right? Termination, small start to break above, pull back to the HVA. And that's the one that fit the rules. And that's the one that's working. Pretty cool. It's almost like somebody spent countless hours and tens of thousands of pictures to give you guys very clear, concrete rules to help you find success with these indicators. You guys remember that book in the Bible where everyone begets everybody? The high probability trend trade teaches you tops and bottoms, teaches you the termination conditions, teaches you how to enter. From that trade, there's the HVA trade. First, it's a top and bottom, and it was perfect, John. Then it was no terminations. Then it was define your entry. And then there's momentum trades, and they all come from the same place. Isn't that awesome? Trina, we just talked about it, and John did it. Triggers were in the right place for it. That is the greatest thing you could have ever said, Trina. Triggers were in the right place for it. You weren't fighting small triggers. You were trading with small triggers from a termination. Outstanding. Boaz, everything says up, 2 triggers through, pull back to the, oh no, you momentum trade it. Get in with nothing in the way. Estefania, that's your move. When it comes back to the area inside of triggers, you get out. When divergence prints up here, you get out and just waiting for the next one. Nice job, Boaz. Momentum and potential. Find a way to get paid, right? And then just sit tight. Wait, next one's coming. It always comes. Great job. You guys are pretty stinking smart. You know that? Oh, it's still going. Still going. But what's the read? The read is down, right? I'm on the weak side. I've got room back to trouble. What if we got to close below triggers here? What do you think? Would it fit the rules? Pull back to the area. Down, weak side, room to trouble. Pull back to an area. I've got 42 seconds to think about it. Does it fit the plan, the KISS plan? That would be the only question I ask. Does it fit the plan? For the brand new user, you're darn right it does. Some of you, as you grow with the software, will say things like, well, it's coming from a termination condition. Do I want to take it? And you'll have to make that decision. 16 seconds. 12 seconds. 8, 7, 6, 5, 4, 3, 2. Well, look at that. It didn't give us an opportunity to make bad decisions. How awesome is that? Adam P. Right click on your chart. Go to indicators. Let me know when you get there. We'll do it together. And you're going to be T3 Fibs, Pro Trader, Synthetic New. Scroll down. Oh, is that right? Hold on. Nope, I missed it. Hold on. T3 Pro Trader. My bad. 1-to-1 small swing. You can make them whatever width you want. So if you want to make them bigger, just make them bigger there. There was my close below. Do we want to get in late? That's the trade, right? Down, room to trouble, close below, stop where the market shouldn't go. Did I follow the rules? Does it guarantee a winner? No. Does it guarantee I'm in a trade? It does. Guarantee I got into a trade. There's no doubt about that. So what's going on? My small triggers are rolling down. I like that. You guys just want to see if the HVA is a good target? What do we need? We got to get through these large triggers that are up, but this says down. This says room to trouble. Small triggers are rolling down. There's John Novak's white bar with an open below. Boink. Moving so fast it didn't even fill me. Get out. Give me that money. Give me that money. There it is. Any questions? Once again, guys, I'm just going to drop the mic. That's your whole plan. And it made it to large chart trouble. And that was a 4 lot. Like magic. Like magic. If the rules are met, we will, Marlon. Had 3 consecutive trades using momentum and clear path. I would like some feedback on entry. You just jumped in and it worked. You just jumped in and it worked. You waited for the good side of the triggers and it worked. I don't have a top of the candle pullback rule, Papa, but let me show you a pattern that you inadvertently recognized. So let me ask you first. With the smalls below the large, do you recognize that as strong triggers? Whoa, that's super itty bitty. That's going to be the most important part of this lesson. Do you recognize that separation as strength? Perfect. And over here, you said down and nothing in the way, right? So all we're looking for is a way to get in. When I have strength, and more importantly, when the large chart is strong and down, nothing in the way, right? Large chart has to lead the way, Papa. There is a pattern, and everything is patterns. I don't know if you've realized that yet. With these strong triggers, if I get an up bar, I'll sell the down bar. If I get an up bar, I'll sell the down bar. That's a pattern. You nailed it. Now over here, you get an up bar, but you never get a down bar, right? And the triggers roll. So you wait for the close on the correct side of the triggers, and it works beautifully. So when those triggers are in favor, up bar, sell the down bar. And even if you're selling it on the way down, that's cool. You're using that up bar, the top of the up bar, for stop placement with the anticipation that it's going to continue down. Does that make sense? That's a pattern that we've been using for a long time. So DSD. Let's see if we can find a live example of it. Strong triggers down. Well, it's a little different on minute bars. Let me find an example here. I'm trying to find like a good look. Whoops. All right, there it is right there. I'm going to make it a little bigger so it's easier to see. Okay, John's got it too. Right on. Everything is screaming down, and this bar comes up, right? And there's a top of the bar. And then DSC, your next bar starts, and it starts down. Sell it anywhere. Stop goes above the up bar. Up bar goes up. As it starts back down, next bar prints, you're in. Stop goes above the up bar. What does that do? If you get 2 consecutive up bars, you get stopped out right there. It's not a lot of risk. And let's see what John's looks like. This has been around for a long time. Down bar, up bar, trail stop, down bar, up bar, trail stop. And that's kind of that's how this started as a management thing. Down bar, giddy up, down bar, giddy up. So there's your down bar. John's got to stop waiting for it if it's a down bar to get in. So when that becomes a down bar, he's ready to take advantage. That's a good picture, John. Victor, everything said down, pull back to the area, close below. Was it worth the wait, Victor? And that's exactly what it is. It's momentum trading. So, Papa, nice job on that one. Victor, was it worth the wait? Yes. You were in at 76, you were out at 49. That's 27 points. What is that? 540 per contract, 2 contracts. That's a $1,000 trade, but it took you 3 hours to get there. How many people in this room typically make $340 an hour? You do now. Nice trade, Victor. Perfect. You know what stinks is I was in paper trading and not in my live trading to take that one, and that was my fault. John Novak and I have a little competition going on right now. Paul, perfect. Perfect. So this is kind of like Boaz and Pete, right? Two different guys, different parts of the country, different backgrounds, exact same trade. That's the part I want to stress. Have a plan. There are no mental plans. Have a plan. Prove that it wins more than it loses. Follow it like your financial life depends on it. Great job, gentlemen. You too, John. Good lessons there. Triggers are down. I've got no room to trouble. Give me a Y if you see it. I've got absolutely no room to that zone. There's that white bar with the open above. You want to see if they make it to the next zone? John Novak loves that bar. Problem is the small triggers are still below the large, makes it a little less likely to work, right? Triggers have to be right. I think Trina taught us that today. But that's your pattern. First it's a termination, then it's a white bar, then it's an open above. If this bar closes higher, it'll give us a real pretty green line off of that high volume area. But the triggers don't support the trade. Not yet. Not yet. No, I'm not, Boaz. My rules aren't met. Great momentum. Because of large triggers to entry areas, you waited for the reversal bar. Adam P., you chose to wait. Got out. Third divergence. Nice exit. Great job. So there's two ways to think about this, Adam P. And tell me what you think about it. And let me do this. I love the trade. So there's an entry point. And there's an entry point. And my stop has to go right here. Right? Does that make sense, Adam? You with me so far? So from 0475, there's my stop. From 0275, it's almost the same stop distance. Does that make sense? It's the same risk from either place, but what's the difference in the trade, Adam? Room to make money. Room to make money. So a lot of us can't do this math that fast. You'll get to a point to where you can, but sometimes the reversal bar isn't your best bet, especially when it's only the potential to break and divergence prints. Lowering risk on a medium probability trade makes sense, doesn't it? And again, you're going to have to make your own decisions. But if I'm going to get in with the reversal bar, I know that I've got 14 ticks of risk. If I get in at the area inside of triggers, I might only have 13 ticks of risk. And then once the reversal bar prints, I have 2 or 3 ticks of risk. And that feels good. That's kind of going a little next level, Adam. That's that next step where before, like when the market is over here and you're thinking about it, you start running calculations in your head, right? You start going through those scenarios. What am I going to have to risk if it pulls back to here? What am I going to have to risk if it pulls back to here? Is it worth the risk? And That's one of the cool things about trading, is you'll never get surprised by a trade. You'll know exactly where the entry comes from. You'll know exactly where stops have to go. You'll know exactly where the market is likely to go should you get an entry. And you'll know exactly when it's time to cut ties if things change. That's the beauty of having a plan. Short trade worked. All right, guys. Smalls were below the large. Give me a why if you see how the rules weren't met to take that high volume area trade. You guys trying to go counter trend from terminations. Triggers told the story. It's Downsville, population U. That's it. You don't have to be the first one in. It's fun. It looks cool when it happens. True story. It's a lot of fun to be that first person in. But if it's not perfect, man, you're more likely to get your ass kicked than you're not. And that's repetition, guys. That's time. They say that repetition creates recognition. The more times you see the same thing, the more likely it is to stick. I'm going to show you guys one of the easiest ways to make things stick. Are you ready? Even if you didn't take the trade, but you think someday I might want to, draw an arrow to those triggers and go keyboard mode. Because the smalls are below the large, there is 0 trade rules met here. What did I just do? I didn't talk about how to win. I didn't say I could have made money if. I said my rules aren't met, and that's what it looks like not having my rules met. Which means that when this happens live next, I'm even more likely to avoid this loser because I'm starting to find the things that pull money out of my account. Guys, I haven't done this count in a while. John Novak's going to come in and show 3 times this number. I've got over 19,000 pictures. Over 19,000 pictures. There's a reason I can read charts quickly. Miss Trina. Entry here. Notice the small triggers are in the correct spot, and it makes it right to trouble, right, Trina? That's it. You didn't take it, but now you're getting better. You're learning. Nice picture. I like that. It works. There's a connection. Big Rat, apparently they took off a loss during the outage yesterday, which means I didn't have to take a trade today. Combine pass. Congratulations. The only way I can fail with this TV setup is to over leverage or over risk. I'm really happy buying 4 more Top Step $89 all-in ones to copy, trade behind this account. I'm ready to go roll. I like it. Hey, Big Rat, maybe I'm biased. Well, who are we kidding? I'm totally biased. $89 for an account. Dig it. Did you know that Nexgen Pro Trader funding is 90% off all evaluations right now? Same trading view. Did you know that your activation fee gets credited to your semi-live account when it's time to make money? That your evaluation fee is getting credited to your semi-live account when you pass it and you're ready to make money? There's no trailing drawdown. There's 1-day pass. Everything, excuse me, everything that John Novak loves and hated about prop trading, he put into his company. So feel free, knock out the 4. Or just for grins, why not go get 550,000s at 40 bucks a pop? Spend the extra 20 bucks on a copier and rock it out if you feel like that's the best choice for you. But I would hate for you to go spend $500 when you just didn't have to spend that much. This advertisement brought to you by Nexgen Pro Trader Funding and all of its affiliates. Victor says, can you explain the white candle up and the next candle down thing? It's not a white candle up, Victor. It is odds favorable momentum, down bar, up bar. It was a way to manage bigger trades. And when everything is screaming, it's a way to get in. You don't understand the Ninja Trader or the Nexgen Unrealized. All right. So in a lot of prop firms, Big Rat, in a lot of prop firms, if I go long here, and at this point in my trade, I'm up $3,000, but I don't get out until down here, and I only make $1,000. A lot of companies will say, from your highest equity point, your drawdown trails. Which means that when the market's up here, even if I don't close out, my trailing drawdown keeps following. And I could still make $1,000, but my trailing drawdown could be $2,000 worse. Does that make sense? That sounds like grade A baloney to me. Grade A baloney. Now Nexgen, if your trailing drawdown is here, it doesn't move until you close out. It has nothing to do with equity highs. There is no unrealized profits. Your drawdown isn't calculated until the close is made. So if you go up and come down and go up, your trailing drawdown, it'll go up. It'll follow when the trade is done. And then if you get in the next trade and it comes down, it doesn't move. And then when it goes up, then it trails. Close out up here. So that's one of the biggest complaints about people in the prop trading world, is that you can have unrealized profits and still get docked for them. So it creates this need to trade out of fear, to take profits before it's time to take profits. Nexgen Pro Trader Funding doesn't do that to you. And I don't have a bad thing to say about any other prop firm. But if it has an open equity trailing drawdown, it forces you to change your management plan. I hope that made sense. Victor, that's John's picture. When it's super strong, yeah, only closed trades, Big Rat. I'm telling you, we did an enormous amount of research on what people hate and alleviated it from the matrix. The drawdown numbers are generous. No trailing equity. After your 16th payout, you keep 100% of it. So Victor, all that up-down bar is, it's just going to be one more thing to confuse you. But when it's screaming with strong triggers, you'll see down bar, up bars a lot. Initially, it was just used for stop placement for bigger moves. But if there's nothing in the way and it's screaming, you can ultimately use it as entries a little bit. I don't have a plan for it, but it's a great way to trail stops. So like if I'm in a short trade and I've got strong triggers and it goes up then down, I can use that up. I believe it's through the week. It might be. I don't know. It might be an end of year thing, but stock up. I mean, tell me where you're going to find prices like that with a $4,800 drawdown only on closed equity. And the great thing is you can come to my class. If you're not passing evaluations, show me your charts. I'll give you everything I have in my arsenal to help you beat those evaluations. I want you to. We want great traders. We spent 30 years teaching people to trade. Don't want you to start failing now because we're funding you. Do we have a phone app? No. Do you need one? How are you trading on TradingView? I can put TradingView. Here, look. So when you do it, I log out of paper trading. I click on AMP and I connect. You guys don't get to see my login credentials. I don't want you guys trading my charts. I'm watching you. So what I'll do, let me log in real quick. Whoops. And once I log in, almost there. I've got drunk fingers. Once I log in, I'm in TradingView. I've got my Nexgen accounts. I've got my evaluation account. I've got my semi-live account. And then it's just business as usual, just waiting for the trade. So there's TradingView right there. So you'll place the trade in TradingView. You'll place the trade, stops, targets, everything. It'll show you exactly where you are on the day. Go through the account summary. I'm only up 220. I just took one quick one. Gives you everything, your order history, your orders, your positions, your account summary. And then when you go log into the Pro Trader site, is that me? That's me. You can see your evaluation accounts. You can see your user profile, your payment history, payout requests, evaluation accounts, how to buy them. You can use the copier, 20 bucks a month. You could copy all 5 of those accounts, make 100 bucks in one, it's 500 across everything. And John did the same thing on the copier, where he took everything he hated about copiers and made it better. So we'd love to have you join us. If you feel like that's the best decision for you, I don't tell people what to do in the markets. All the momentum. Nervous about this termination? That's small chart, right? Adam P., where do termination conditions come from? Now, if you said I'm nervous about this termination, that would make sense. Large chart, right? No divergence, strong triggers, right back to the area. Beautiful entry on the reversal bar. Easy money, Adam. Great job. Great job. The awareness helps facilitate the plan. Carl, hi Mark. Quick question on the 150 account. Once you pass and have, let's say 1 or 2 trading days and hit the 85 profit target, are you able to take out the 8,500? No. That would be ridiculous, right? So Carl, when you pass and you go semi-live, Adam, where do termination conditions come from? Large chart or small chart? There's one termination condition on a small. Man, you're different though, Adam, because you're trading without synthetics. So you have to be aware of fibs on the small. You have to be aware of fibs on the small. But that's just a divergence. Doesn't faze me. It does because there's one over here. But I would need to see 3 of these to become a termination condition on the small chart. All right, hold on, Carl. I want you to see real quick. Evaluation rules. So that's how you establish profitability. Don't hit the drawdown. Don't trade too many contracts. There's all that. And then once you get in your semi-live account, Adam, give me 1 second. I'll go full lesson on it. I'm sorry. I didn't realize that that was going to be more of a lesson. Give me just 1 second. We'll go full tilt boogie on it, I promise. So, Carl, you have to trade 8 days before the first payout is requested. So there's your first answer. The minimum payouts is 500 for 60 days. There is a maximum payout, and that's probationary, making sure you're not blowing stuff out. I'd have to take a look to see exactly what it is. It's in here somewhere. So when you go to payouts, it is in the instructions here. I don't have it memorized. But I believe on the $150,000 account, you have to be over 4,900. That locks your drawdown. So once you're, here we go. So once you are above, drawdown must reach 154,900. You've got to get to 159 and your drawdown will never move again. And then there is, let me find it, payouts. Sorry, I don't have all this memorized just because this is not my expertise. So on the 150,000, you can withdraw above 154,900. You can withdraw $3,000 every 8 trading days for the first 60 days, Carl. After that, until your 16th payout, you can take 90% of profits. And then after your 16th payout, you can take 100% of profits. Does that help? Yeah, no worries. I try to be as helpful as I can. All right, so Adam, let me address your question on termination conditions. You're trading the system, right? So you don't have small chart fibs over here. So you don't have any synthetic fibs, right, Adam? So the rules change for you. And let me show you what I mean. All right, so let me do this. You're running without synthetics. Watch this big red fib right here. It's going to reload and go away. What does that mean? That means that anytime you see a fib on this chart, you have to believe that it was on this chart, Adam. Does that make sense? So if I make a horizontal line right on a fib over here, that's that one. But all of these fibs too, you have to believe that they exist. You're welcome, Paul. Good stuff today, man. Does that make sense? You're not pulling synthetics over, and that's why your small chart rules say don't take a trade with divergence from a fib on the small chart, because in any other arena, that would be on the large chart. That would be divergence from a large chart termination. But that's up to you. Adam, I can't tell you to change anything. If you're trading all manual, not auto right now, why not have that information there? If you're okay without it, if you're very comfortable saying, I know that this fib belongs over here as well, then no worries, right? And you just go to the idea that if it's not coming from a fib, there wouldn't be a fib here. So when there's no obstruction, 3 divergences, that's your termination condition on the small chart. Does that make sense? Good stuff. And that's where I have to adjust my speak a little bit because it's a little different approach. Great stuff. Boaz, down, room, pull back to the area, in on the reversal bar, out at the first sign of trouble, take it down to the promised land, right? And then odds favorable momentum, perfect entry, second higher divergence. with the small triggers up, Boaz, that's your exit condition. That's your exit condition. It's all right to get out. Does that make sense? Large chart's perfect. Entry was perfect. Guys, this is where sometimes those reversal bars, they're costing you money. They're costing you money. And let me show you why, Boaz. And I think this is a lesson that I had to get about 100 times. If this chart is perfect, and I mean perfect, if your large chart is 100% high probability trend trade perfect, if your small chart is 100% high probability trend trade perfect, why are you waiting for a reversal bar? Because it creates a fictitious sense of safety, right? Well, if I get in on the reversal bar, all you've done is you've created an enormous amount of risk. But Boaz, if this is perfect, and even more importantly, if your small triggers are a full bar away, use the area. That's what the rules say. Use the area. Because it's the NASDAQ, do you see how those triggers behave as support? That's your red flag. That's where, when you pull back here, if you're going to take another trade, you wait for a reversal bar. But if they're a full bar away, Boaz, use the area. Have that itty-bitty amount of risk. That saves you hundreds and hundreds of dollars. Does that make sense? There's a time for a reversal bar. Maybe it's not perfect, right? Maybe it's not the highest probability trend trade ever. I'll force a reversal bar. But this is the sexiest look that you could ever have on a chart. I'm in at that area. And when this happens, then I'll manage out. Good stuff. Good stuff. All right, guys.